Welcome back to the Beyond Money podcast, where we explore the stories, insights, and journeys that inspire better financial decisions and personal growth. In this episode, we're delighted to welcome Ashling Bourke, a student at Trinity College Dublin and the CEO of the Trinity Student Managed Fund, the first and largest student-run investment fund in Europe. With a passion for learning and a curiosity that led her on to the world of investing, despite having no prior experience with markets, Ashling took the leap into investing just 2 years ago and hasn't looked back since. Today, we'll delve into her journey of discovery, demystifying finance and showing that it's never too early or too late to get started. We'll talk about what drew her into investing, the lessons she's learned along the way, and how she's using her leadership to empower other students to build confidence with money and the markets.
So, hi Ashling, thanks a million for coming in, joining the podcast. Really happy to have you here. So we just kind of wanted to talk around about your background, if you wouldn't mind just kind of telling us kind of how you managed to kind of get into Trinity. I know you're from America, so kind of tell us a bit about that.
Yeah, so thanks for having me on first off. But yeah, I grew up in the States, and then when we were thinking about where to go to college and whatnot, my parents both suggested thinking of going abroad, and they're both from Limerick, so it was just a very easy choice to think of coming to Ireland, where I have family, and it was kind of like a home away from home. I'd spent a lot of time here growing up, so that was really, really great to be close to family for the first time in my life. And then as for getting into finance, I was just really, really bored during COVID. And I'd done a personal finance class that was mandatory in my high school. It's kind of becoming mandatory for a lot of high school students in America. And that's when I gotten the first kind of understanding and taste of what kind of financial markets were. And I decided, I'm super, super bored. There's nothing better to do. And so with a spare $5 I had in my pocket, I decided I'll throw this onto what's it called?
One of those investing
Yeah,
apps.
an investing app where I could just kind of put $5 in and see where that could go. And I just spent one night kind of playing around, buying and selling things, and I was just instantly hooked. I think I ended up losing that $5, but I ended up putting in some more and ended up just finding new stocks and just started really falling in love with the story behind everything and trying to find out the reason why things and markets were moving.
Yeah, I think stock investing, it's an absolute maze, as in you're never going to know everything about the market. I think there's so much you can learn and you can get so hooked in it. I remember spending nights just looking up everything, and the time absolutely flies. And again, that fractional investing I've kind of started that, or say around the same time during COVID. Absolutely fascinating. It's kind of what really got me into the stock market as well. So we just like to kind of talk about, say, the Trinity Student Managed Fund, how you kind of went into that, how you gravitated towards that, and kind of why you joined that when you kind of got to Trinity College Dublin.
Yeah, so when I got to college, or I guess even before I got to college, I would find a stock that day, kind of when I was on that app trading, and then I'd go home and I'd sit down at the dinner table and I'd kind of almost propose the stock to my family. Not that they had any expertise in financial markets, but I was I just wanted to get some feedback on kind of what I was saying and for people to hear the idea that I've been crafting up all day. And then I realized they didn't really care quite as much for financial markets as I did and for the story behind the stock. And then I also realized maybe I wasn't really understanding why things were moving the way they were. So when I came to college, during Freshers Week, I stumbled upon the Student Managed Fund at the stand, at the Freshers Fair stand, and they told me you can learn how financial markets work and why they move, and that community of people where I could learn that together, and there was no need to have any knowledge and start from scratch. It was just incredible because it meant I could learn with people and actually really figure out why things were moving the way they were.
Can you give us an example, Ashleen, of maybe one of the stocks or shares, as I call them, that you would have bought perhaps before being introduced into the funds? Is there any that you can think of that you may have pitched to your family, as you said earlier?
Yeah. Ooh, I'm trying to think.
One example of one, would it be like a Pepsi Cola, a big blue chip type stock, or was it something completely kind of not known that you had stumbled upon, or did you have a philosophy around, was it in a certain sector like tech or pharma, or was it just completely random? I'm just interested to know at that early stage what your kind of thought process was.
I think I saw somewhere you writing kind of look what's around you, kind of look what you can't go without every day. Maybe look kind of something that, say, I remember you even mentioned the batteries that you're using every day, something like that. Is there any kind of stock, I suppose, that you say bought before maybe going into that fund, where one of those stocks that you'd kind of mentioned in kind of that piece?
Yeah, I think I started with, like, the really big classic blue chips, like Apple. I thought that was, like, I really understood it was a big company, could buy fractional shares of it, so that was very easy to dip into, and then something I'm quite passionate about is, like, ESG and kind of investing in the future. So I started getting really into, like, water stocks, which wasn't great, because I really didn't understand what was going on there and understand what was moving them, but it was kind of that being able to put my money where I wanted my impact to go. And so that was really where I first started looking, was not only kind of the names I knew and the names I was comfortable with, but like what I actually really cared about.
Okay, because it's a really interesting story. Because I've been a financial advisor. You're asking me off air what my own background was, but like, so I studied economics in London. I'm from Cyprus originally, but my family kind of located there. And I always had a passion for finance, and I got into investment banking, and that was me for life. And then I moved to Cork back in the late 90s, so I had to reinvent myself. But for the last 27 or so years, I've met so many people, and I try and help educate them in terms of, making the money work harder for them, understanding the concept of investing and, the risk reward table of, low, medium, high risk. And interestingly, there's a lot of learnings from even what you've said so far around, okay, you dipped your toe into the water, which is the way I would phrase it. Maybe took a loss or two, and on the way, probably realized that there's a bigger universe, respectfully to you, kind of stock selecting, which is typically what you probably were doing. And that's typically what I find with a lot of people now, especially interestingly, it's almost kind of come full circle. So, when I started to, even in recent times, and this is probably part of this kind of COVID phenomenon, as I call it, the respectfully to everybody, the armchair investors, as I would call them, love the people on, the likes of Reddit and so on, that were never really familiar with investing, but they became almost like a community, and they're online. And I'm not trying to take away from them. I actually think that there's some great experiences that you can take, and probably without realizing, like you mentioned, the fiver. So in the way I would kind of see that is that you invested what you could afford to lose. I presume the fiver was not going to break you, but more so is that, yes, okay, you did some analysis, which, okay, people can call it going with their gut. They can phrase it whatever way. You've given a sense of, like, maybe it was more ESG concentrated, which is obviously, maybe for people who don't know what ESG stands for, but it's just environmental social governance, which are, I suppose, companies that are seen to be kind of green, if you want to rephrase it that way. Tell us a little bit more, so Ashling, about the Trinity Fund and how that changed your kind of thinking, and maybe how you sort of developed the ideas further.
Yeah, so I think when I first started out, I was like really, really scared of certain sectors because I didn't understand them. Like I didn't want to go near tech because I thought like I didn't understand tech enough. Like thinking back, like if I'd seen a video when I was 18, I would have like freaked out, like run the other way. But coming to the fund, like we learned the basics and fundamentals of how to analyze a stock across every sector. So even though I started out as like a financial non-banks junior analyst, it meant that I could still sit down and understand what Nvidia was doing and how it was making money and what its cash flows were, which was super important. So learning those basics and fundamentals of analysis meant that we could have this common language between us when we were discussing things, and it made understanding stocks and kind of what the opportunity was so much easier for me. And that really opened up the universe because then I had that financial literacy that I could then go and read things easier and understand things a little better.
Okay. And how, say, in the Trinity Student Managed Fund, how are stocks selected? I think you said there was 14 different sectors, but how are they actually selected for the portfolio?
Yeah, so it starts at kind of our sector manager level. So just for some kind of visualization of how the fund's structured. So we have a few hundred junior analysts. They're all split out into these different 13 or 14 sectors, depending on the year. If we want to condense pharma, we're split out into two.
So we say analysts, excuse me for interrupting, but you're talking about students.
Yeah.
So you have literally 100 plus students that are, as you described, an analyst.
Yeah, so we have about 2,000 general members, and about 500 of those apply to be junior analyst. And the only thing we want to see when they do apply is that they want to learn. They could be from any background, no knowledge necessary. And I mean, that was me definitely. And then from there, they kind of go into one of those sectors and help learn the basics and fundamentals. And then a senior analyst and a sector manager lead that each sector. And so that can be anything from financials to industrials, basics, consumer staples. And so from there, they are idea generating. So they bring the stock selections to our investment committee. So we have one every week, and that's where they'll come. It's about a 10-minute pitch, 5 minutes presentation, about 5 to 10 minutes of questions. And from there, that's when we really get to understand, should we take it into the portfolio, how much we should actually allocate to it. And so those kind of allocation decisions then go to our investment officers and our CIO, who decides how much to allocate and when. And so they have more of a portfolio management kind of role, where the sector managers are really the people actually presenting what we should hold in the fund.
And just for context, actually, because I have to excuse my ignorance, but I was blown away when I read the article, I think, that you had published recently, and then Josh has kindly kind of filled in some of the gaps. But I mean, the fund is north of 750,000 euros at this stage. Is that right?
Yeah, about 700,000 at the moment.
700,000. And I mean, I thought that was kind of virtual money. And again, I've been obviously corrected on that. But I mean, to me, that is just mind blowing. But even the way you've described it, I mean, the number of analysts you have, I mean, the sophistication of the fund is beyond what I would even have thought possible. And I'm just interested to know, so we'd spoken briefly before about, corporate governance, and I'm just, again, fascinated from my perspective around not maybe anyone deliberately trying to do this, but just, many people might come to you with an idea, or, you spoke about these managers, but, what protections are there in place for the funds? Just like that, in the event of what we've seen recently, that there's not a massive kind of capitulation, because I'm getting the sense that it's a mostly equity fund. Would that be fair to say?
Completely.
It's completely
Equity, yeah. So the way we think about the portfolio is like, we could have $1 million, we could have $0 in the fund. That money is just used as a learning tool. So at the end of the day, tomorrow we open up the account and it's completely at zero. If we've lost everything, that's okay, because it would have been a learning opportunity. And so every year we've seen every kind of IC or investment committee has one kind of giant macro experience that they have to live through and manage the portfolio through. This year it happens to be kind of Trump tariffs and a lot of uncertainty around the US macro, especially when we're really exposed there. So the way we kind of manage that risk is that we are like fundamental investors. So we're looking for really good companies that have that intrinsic value, that we see a catalyst in the next kind of year, maybe 2, that will bring that value out and be able to see that value at its full kind of worth. And so for us, there is no real worry about the macro tanking the fund, because at the end of the day, we don't have anyone we owe money to. We don't have investors that we have to pay out money to. For us, it's a learning tool. So if we gain a bunch of money, if we're up 100% on a stock or down 100% on a stock, it doesn't really matter to us, as long as we've walked away with some form of learning.
And how often are you kind of tweaking the portfolio? Say, I know in the last few months, obviously it's been very volatile. Have you changed it a lot, or is it kind of when you first select a stock and you get the thesis, it's a long only kind of, we're going to hold it for this long? Are you kind of changing it weekly, monthly, 3 months, every 5 months?
Yeah, so we look at the portfolio every day. Like, if we need to make movements every day, we will. We don't tend to, but we tend to reposition kind of pretty regularly, a lot more than other student managed funds that might do it only once a semester. We'd be doing it probably minimum every few weeks.
And is there any, sorry to interrupt you, Ashling, but is there any kind of like hard and fast rules you guys have? Like, do you have a kind of a stop gap where if it falls by 10%, you sell, or if it goes up by 100%, you sell? Is there any of that, or is it more kind of technical analysis? Is it based on whether or not that stock still sits well in the portfolio?
Yeah, it's definitely more of if that stock is still a good portfolio and if we're comfortable with the amount we've allocated to it. We've had kind of a maximum allocation of like 20% to one stock at one point, and we really felt really comfortable with that because of how strong the thesis was and how proven that thesis had become. And we eventually started to taper out of that position as we felt that that thesis was becoming more and more true. We wanted to capitalize on those gains. And so stuff like that, like we don't like having hard and fast rules because we feel like it can kind of limit us. So having a general kind of common sense to the fund is our best rule, because if you had to go and explain it to someone else and they kind of look at you with wide eyes and be like, why are we doing that? Then that's where we get.
And just again, for listeners who may not be familiar with the fund, but I read somewhere you started at a very small amount and you've generally outperformed. I don't know if you track any indices, but the performance of the fund has been phenomenal. I mean, it seems to have beaten a lot of fund managers, which is remarkable to be honest with you. But give us some sense of like, when did the fund start actually?
Yeah, so it was founded in 2011 with about 30,000 euro, all donated from corporate sponsors. And so then we've had a pretty successful record and of beating the benchmark pretty regularly. We've had a few years where we've slightly underperformed when the benchmark's been outperforming incredibly.
What is this benchmark?
We are against the MSCI World, so
Okay.
we like the kind of international exposure that gives us because we can invest across kind of developed markets, so it gives us that exposure.
And how many shares roughly does the portfolio hold? Like, for example, at the moment, do you have any idea of how many shares there are in the portfolio?
We are allocated around about 25 stocks at the moment.
Okay.
Some of them we're kind of very, very heavily into, and then some of them are quite small positions, but our smallest position tends to be about around $2,000. And our largest position can kind of vary very much depending on how strong we view.
In terms of kind of, say, the portfolio, is it mostly US based, or is there kind of a Europe aspect? Is there an Asian aspect? Because I think I read a thing there earlier today. It was the S&P is down, I think it's around 6% this year. The DAX, which is the German stock market, is up about 18%, and the Chinese, the Hang Seng, is up about 18% as well. Do you have, I presume you're a lot US based, but do you have exposure to kind of the Europe markets and any other markets like that?
Yeah, we were really heavily exposed to the US in kind of the first half of the year, or in the last half of last year. And then as we kind of saw that uncertainty starting to rise, we definitely started pulling back and getting a lot more European exposure. But we tend to balance majority like European, US, and that kind of can flip depending on how we're feeling about each market. Like a few years back, we were overexposed Europe, and now we're kind of slightly overweight US. So it really can depend on how we're feeling about the macro, which is very nice that we have the
broadly,
flexibility.
where do you get research from? Like, do you have any kind of particular journals or analysts that you follow?
Terminals even?
Yeah, like we're so great that like so much of what we look at actually comes from internal, and it's a lot of research that we've created ourselves, but we're always listening to things. And if you ask every person in the fund, they'll have their own substacks and things that they follow, but we absolutely adore things like the FT and like the FT daily briefing to keep everyone up to date. We really love Daily Chart Book as a substack. It gives you like 30 charts every day. We always like to find one or two that are super impactful. But just like listening and reading constantly is the best way we stay informed.
And for anyone that's listening, Ashling, that has an interest like you did a few years ago, is there any like thing that you could suggest? I mean, you've just mentioned, I suppose, one vehicle that they can use, but is there anything particularly it would be a go-to, like even just, I don't know, approaching the university you're in? Because we were speaking earlier, I think Josh, you were saying you obviously were educated in UCC, and they have a...
Yeah, so I was in the student managed fund in UCC. Now it's a virtual fund, it's not real money, and it's not set up the same. So I think it's more like a competition where there's kind of 5 or 6 fund managers. I served as a fund manager in my final year. Now each fund manager kind of manages its own fund, and this is tracked kind of nearly as a competition ranking. The winner isn't always the person who kind of performs the best, I suppose, monetary wise. I remember one team, all right, like, isn't their portfolio performed so well, but it was simply due to the fact that they had about a 60% exposure to Coinbase, and at the time it was like, Joe's, and it was like, your fund is so risky, but that wasn't the whole goal of it. The whole goal of it was kind of, it's a learning experience. It's like, why are you investing this? Can you stand on that investment? If that were to fall, can you kind of rationalize it and be like, I invested in that because the fundamentals were good, not because this whole hype train that kind of came around that stock. So I absolutely adored the student managed fund. I have friends still from that time. And again, I think it's a great place where you can collaborate with people kind of like-minded, because like there's not many places where you're going to find people where you can just talk kind of just about the current climate and the current stock market and the current kind of what's going on in the world. And I think I found it a very valuable place. And I actually learned so much in those, say, 4 or 5 months where the portfolio was going. And again, I know it's a very different now to real money. As it, like, I don't think we'd be kind of making a lot of the decisions are very different when you're kind of dealing with real money than virtual money. But yeah.
I get this kind of impression, and again, this is my, I suppose, age kind of showing, but it almost sounds like there's kind of a trading floor in one of the rooms in in Trinity. Is that broadly what it looks like? I mean,
I wish. That's the goal, I guess.
okay.
That would be incredible. But it really is just a bunch of group chats and us meeting as teams. And our weekly IC is this big in-person round table, whether it's hosted in a classroom or if we can get our hands on kind of one of the more board style rooms. But it is just a really big conversation. We're really lucky that the college does provide us with access to like Bloomberg terminals, and we have access to like things like Capital IQ and Coifin and Intigas and Quarter that do provide that kind of that technical stuff that you would see on a trading floor, but there is that no visible kind of front stage like that, which is, it'd be great to have.
And actually, you've alluded to the fact that, you know, you personally like ESG. Are there any stocks that you wouldn't buy just because they're obviously maybe arms related, or I presume you don't buy Bitcoin or cryptocurrencies?
Yeah, no, we don't buy crypto. It's been something floated, as is things like, you know, private equity and private credit. But yeah, we as a fund don't buy into oil or defense, just as a bit of kind of personal boundaries that we set. Just because we think, you know, if we're trying to invest in a future for us, and that's really important to us. And obviously it can limit what we do buy if we're not looking, if the utilities sector manager can't look at gas companies, but looking at other opportunities really creates a discussion around why we can't do things and why we might want to or why we might not. So it's a really great kind of point for discussion as well, I think, in the fund.
I think you said you 14 different sectors. Are you invested in all 14?
Yeah, so we hold at least one position in every sector, just because we feel like when you have weight in the game as a sector manager, when you have a position actively in the fund, you're just going to be so much more engaged, and it's such a great opportunity for learning. And to not have something in the fund is just, it's a lost opportunity for you as a sector manager. So even if, you know, the MSCI world might be underweight real estate and we don't really see a great opportunity in real estate, fundamentally there must be a good piece of real estate out there.
Again, it comes back to kind of the whole learning piece. You want to kind of get everyone involved in it. And I suppose as in you want to have skin in the game. If you don't have skin in the game, you're kind of, you know, nearly outcast. So I think that's an absolute amazing thing you do.
And I suppose, Ashling, the sectors you've just spoken about, one of them, I presume, which is real estate. And you're suggesting that you can buy, I suppose, a stock in a real estate company, because some people may not realize. But give us an example of other sectors that typically are part of this 14.
Yeah. So we have things like very traditional, like financial banks, which everyone thinks is the sector they should go into if they want investment banking. But it's really trying to understand, you know, how is a bank running? How are they making money? And then we also have things like consumer staples and consumer discretionary. So things that consumers can't live without or really, really want and like to use. So those are much more tangible sectors. But we also have things like tech hardware and tech software, where, you know, you could be thinking about the chip in your phone, or, you know, the software that goes onto your phone to make that chip work. But yeah, we use the MSCI classification for that because we think it's a really great way that we get exposure to everything and have someone always looking at every part of it.
And if I was, for example, like an over-exuberant student, and I came to the funds and said, you know, we must buy gold because gold is an asset class. Just give me an example of how I'd be treated. So, like, do I have to come with patient analysis, or do I come with the idea and then we analyze it? Or just give me an example of, I'm just interested to know, because if I'm loud and if I'm boisterous, do I get my message over, and how how simple is that? I'm just trying to get a sense of what gets me into the fund or what gets me discounted.
Yeah, so to actually get an idea into the fund, you have to really sit in our investment committee. But for a lot of those pitches from more of our like junior analysts, we have a lot of competitions throughout the year that let those ideas kind of come to light and have them actually flush out that idea. Because for us, it could be the best idea in the world, and this has happened in the fund where it genuinely has been like a 3,000% return or an incredible crazy return, but the person that's come to us has gone, just trust us. And we can't just trust you. Like, we want to have seen why we believe in that story. And so a lot of times we've walked away from incredible investments because there hasn't been fundamental analysis done, and it is just as very boisterous. This is an incredible opportunity, buy now, buy quick. But for us, it's so much more about the learning that you've done behind it and actually having that fundamental analysis and understanding what the catalysts are and also understanding what the risks are. And whether that's coming up through a competition or through a pitch at RIC, those are always heard and listened to. And, the best pitches at our competitions are always listened to as potentials to be invested in at RIC because we understand we're not seeing every opportunity in the market.
Did you have exposure to kind of, I suppose, artificial intelligence maybe last year, 2 years ago, when it was kind of very nearly rock bottom? And did you have you seen growth in any of those companies that you might have had?
Yeah, we thought that full-on AI exposure was almost too risky for us, and we didn't like how much things were moving and changing, and not everyone felt like we had a great understanding of what AI was going to do. And so we thought of a great way to get exposure is through the value chain. So getting exposure to the chips and the actual technology behind it. So some of our best investments have been places like TSMC that provide the chips and ASML that provides the equipment to make the chips. So getting, at one point, I think we had the entire kind of semiconductor value chain and stuff like that has been like incredible ways to get exposure in unconventional ways that we didn't need to go buy NVIDIA when we weren't liking the valuation and we thought it was too expensive, which in hindsight, maybe it wasn't. But it's allowed us, and thinking of other ways to get invested into opportunities like that has been a really interesting way to get exposure at a slightly less risky opportunity.
Have you kind of toned back your investments from these kind of AI companies since obviously NVIDIA rose 300, 400, 500% there in the last couple of years? Have you toned back your kind of investments over the last couple of years, or are you still very heavily weighted on the AI kind of sector?
I think because we have this slightly kind of removed in the value chain, like we have exposure to some data centers and the things that go into data centers, that like that's not quite as cyclical and that hasn't been quite as volatile. So having that kind of exposure has been quite good for us.
Yeah.
But we haven't rode this AI hype cycle. We've been very comfortable in finding good opportunities in places we feel like we've real understanding in the market. So finding, we've loved CrowdStrike for a while. We've bought into it and sold out of it as the prices kind of ebbed and flowed. But, when we saw it take a dip back in like August, September, we were like, that's a great company at a great price. Like, let's buy into it. And so we're kind of going along with big trends, but not necessarily, if we don't adore an opportunity there, we don't feel that we have to go get it.
Yeah, you got to be very careful with trends. Like for example, NVIDIA, as in, you got to be very careful when you invest there. I know since recently enough it's pulled back, but I remember my father coming home was like 3-4 months ago, and him coming back being like, I met one of my friends, very reliable source. He said like this company is like guaranteed to double in the next year. I was kind of like, oh yeah, what do you want about? He was like, I was like, oh yeah, what's the company? He goes, NVIDIA. At the time, NVIDIA was like the biggest company in the world. It was like worth 3 trillion. I was like, you do realize for that to double, it has to go to $6 trillion, which is like absolutely unheard of in 1 year. I was like, that's absolutely insane. Like, so I think you got to be very careful with the kind of the hype stocks, I suppose. The stocks you see kind of maybe on your Twitter feed, you got to be very careful with those ones, especially the ones that have risen 300, 400% in the last maybe year or two.
Absolutely. It's interesting because, I'm taking from things that you're saying, Ashling, and it's interesting because a lot of our role as financial planners and wealth advisors is diversification, different asset class diversification. I appreciate the fund is, very much based on, stocks and equities. And interesting to me, the concept I always go back to, and again, it's more generalized, but, don't invest for the short term. We don't like getting into the speculative game because typically people don't really recognize that it's money that they obviously can't typically afford to lose. And it goes back to the ratios of, your core and satellite, the core being your mainstay of assets, like your property, your pension fund, and then, what you can do then on the periphery. But the fund, interesting from what you're saying, like has been in existence for a long time. So the fund can wait out these downturns that inevitably occur. And what's the purpose of the fund, actually? You mentioned there again off air that the fund distributes a certain amount each year to certain, it's basically for certain individuals. Is that right?
Yeah, I think a lot of times like freshers fairs and when we were talking to people at the fund, they ask, what our bonus structure is, or, how much they have to put in to get involved to the fund, and those two things are very untrue. The fact that, you're allocated this money, like, but you're not actually, touching it. It's really great because there is no barrier to entry, and it allows our primary goal to be education and not fundraising and thinking about, how large we can grow the portfolio. But obviously we have been quite successful, and so those gains have gone out in the form of donations to some organizations that we feel quite embody our message and help support the people around us. So we donate about 12.5 grand, or we have this past year, to Trinity Center for People with Intellectual Disabilities and TAP, the Trinity Access Programs. Those help support kids that might not necessarily have an easy route into college, actually get that higher level education, because education is so, so important. Like, obviously, like, I wouldn't be half the way through my career trajectory if I hadn't had the support in education, just even outside of college. So it is really, really impactful to have that. And we feel that it helps us learn when we get to hear from other perspectives, and vice versa.
And are you talking to any other universities about, I suppose you've obviously now been highlighted, and particularly in the press, and, has anyone approached you about the ideas that you have, or do you think it's something that you can maybe give to other universities that could benefit from your own experiences? Is it very segregated? I'm just trying to get a sense of.
Well, it's really interesting. It's even before, I guess, all of the press that happened in kind of the later half of our academic year. We've had so many students reach out. Like, we had the Estonian SMF, like, in this college called Taltech. They were just inspired by us, didn't even talk to us, and started their own SMF. And it's just like, not even realizing we had that level of influence was incredible. I was on the phone with two students from a Romanian college, and I've talked to students from almost every single Irish college about starting an SMF or how to improve their SMF. It really is this community of SMFs and kids really trying to get into finance and get into learning more about the markets. And it's incredible to be able to support that ecosystem starting up, because it's something that's been so alive in the States and for years, and the funds are massive and tied to their endowments. But here, there isn't necessarily that support. So being able to help other colleges and other students through that red tape that we and our founders faced back in 2011 is really, really helpful, because it gives them a bit of a guiding light of how to get there. And we're so happy to help support them. There is no real like competition here. There is no point in us winning. We're winning if everyone's learning and everyone's growing. It's not this kind of zero-sum game.
I think, yeah, a very important thing about it is like kind of obviously getting people exposure to investing and stuff, but it's about building the habit of investing. It like doesn't matter how small the investment is, as long as you kind of €50 a month, €100 a month, every single investment over time will grow, like compounding returns. And I think the student managed fund is a very good way to kind of get yourself involved with the market, kind of get yourself tapped into kind of what's happening in the world, kind of where I could put my money, where I should put my money. And yeah, I think it's an absolute no-brainer. I think if you're in kind of the finance kind of, well, if you're interested in the finance sector, no matter what college course you're in, I know you said a very wide range of kind of college courses that go into the student managed fund, but it's about being kind of interested in the global affairs, kind of know what's going on, and it's all about building that habit of investing for the future. And it's something that will stand to anyone who's kind of in one of those funds. I know it stood to me, and it's probably stood to you. Whereas it's something now that I can never turn off. I'll never be able to turn off the markets now. As in, it's just kind of part of me. Like, first thing I do every morning is kind of check what's going on. And it will always be like that. And I'm absolutely fascinated by it.
It's interesting, yeah, because we developed a savings club called the Alpha Savings Investment Club, because we do find that there's more and more people who they understand the concept of, saving for the longer term, and, again, like this concept of compounding interest, and they don't have the wherewithal necessarily to buy shares or to even understand markets. They get maybe a flavor of it, but and we were just trying to simplify and really kind of make it simpler for people to say, okay, we want the exposure, we have the time, we just don't have the knowledge, and therefore we use kind of investment managers, and we as independent brokers select, what we perceive to be the best funds within those managers. Interestingly, one of the companies that we deal with, Zurich, they have a fund called the 5-Star 5, which isn't that dissimilar. It's an equity only, typically up to 50 stocks, 5 sectors generally. And it's an interesting fund because it's the probably closest fit that I can see to the fund that you guys run. And without making comparisons, obviously,
Get the chance on.
it's obviously allowing someone to do it for you, or, and it's a fund that I have a personal exposure to, but it's part of a bigger play, and it's just interesting to even hear some of your thoughts, actually. I think definitely is a route in, because I came from finance. Josh, obviously, who's working now for Wealth, and, particularly impressed by just even your own background, Josh, and the interest and appetite that you have in it, because I think for a lot of people, there's definitely an appetite and interest in, I've been kind of following a lot of people on various forums around, not even so much doing it themselves, and again, I don't have any issue with people doing so. It's more of that kind of more general understanding of what makes things work, as I said, which I get a sense of. But no, it's really interesting. Are there any kind of final comments?
Yeah, one thing I just kind of wanted to touch on, I know, is, and you could nearly laugh at this one. It's like, not all investments go up, obviously. It's very easy to do well, say, when investments are going up, and it's very easy to talk about it. It's when investments are going down is kind of when the real kind of nearly expertise of fund managers come up. And I know I saw this in one of the articles. I said I wanted to touch on it. It was one of your own personal investments that had went down, and kind of not being able to kind of control everything that you see. If you wouldn't mind just kind of touching on that.
Yeah, so I think actually a great example of that with the fund was this company called UCTT. And so we really, really adored where they were sitting within their cycle of the mineral that they were, or the, excuse me, not the mineral, the product that they were selling. And we were like, oh, it's at the rock bottom. It's a great time to buy, like with kind of where we see the macro, and he's definitely going to go up. And then we're like, it's going up. And it just never kept going up. And as great as the analysis was, and as deep and as detailed as the analysis was, and however much conviction we had in the idea as a fund, the problem was that the macro just didn't play out, and it took us quite some time to be able to find comfort in the fact that, the macro isn't always going to play out to your strengths, and being able to deal with that and handle that is really a part of like what we're learning to do and growing and how to do, because no matter how much analysis you do, doing more analysis isn't going to make the stock go up more. It's not going to increase the certainty of the return. And so I think it's a massive reason why we don't have incredibly hard and fast rules in the fund, is because things do change all the time. You can't take one singular macro view for the long term.
I think as long as your kind of initial analysis is rational and your initial kind of investment thesis is rational, you can't control anything else that's going on in the markets. And it's nearly just kind of sit back and just kind of wait for things to happen. I think I saw a thing Warren Buffett said, the stock market's a vessel where money gets transferred from the inpatient to the patient, and it's a complete kind of just hold on, wait. If your initial investment was rational, hold on, it will work out in the end.
Yeah, and I think a lot of that learning has becoming us realizing, we've learned from this, and, even when things don't go right, as long as you've walked away with a learning, that's what really matters.
You nearly learn more from when stocks go down. You remember 100%. As in, like, I remember I have a stock in my portfolio and it's sat in there now for about 5 years. And it was at the time, and I know a lot of people will remember this. Do you remember NIO? It was this car company in China that was like, oh, I remember reading about it and I was like, oh my God, this is unbelievable. It's like they put batteries in the bottom of the cars. Fascinating. So I put, like, it was one of my first investments ever. Put money into it. It's sitting in my portfolio now, down about 95%. But I leave it there as like kind of a reminder to like kind of not what not to do. Just kind of a stark reminder of kind of how far I've come and kind of this is the best in the world. But yeah.
It's very interesting.
Uh,
Listen, Ashling, thanks very much again for coming along today. It's really fascinating, I have to say. Really appreciate your insights, and best of luck with the fund, obviously, for the future and for yourself. It's a great testament to anyone who has an interest in finance that, there's a lot of learnings for sure.
Yeah, I think I just wanted to end on this one piece. It was from one of your articles, and it's just about that forever learning. The forever learning. Sorry, it was just about forever learning and staying curious. I think that's one of the biggest things about, say, investing, whether that be kind of in direct stocks, investing in kind of in ETFs, in kind of the funds. The quote went something like, "For someone who loves a challenge, it's the best, never-ending game I want to keep playing. Investing isn't about having all the answers. It's about staying curious and asking questions." And I think that's a good way to end the podcast. It isn't a binary kind of solution. It isn't 1 = 0. It's kind of something that will forever change, and the more learning you do into it, the better you'll get at it. Yeah, again, thanks so much for coming over. Really appreciate you coming out to the podcast.
Thanks for having me. It's great to talk about, learning and education. It's something we're really, really passionate about. So really happy to talk about it a bit more.